All right, so today I'm going to be talking about trading tools that give us an edge in the Forex market. Now, you may be inspired by individuals on YouTube and trying to copy their strategies, but you probably realize that it's not that easy to copy somebody else's strategy, especially if they're very skilled in that and they see different things than you do. And so it feels kind of impossible to find that edge. So I specialize in algorithmic trading and have been for the last 8 or so years. So I build trading tools that trade the market automatically with a bunch of code on the inside, and allow other traders to take advantage of this. And so today I'm going to be talking about an algorithm that I built about 8 years ago and constantly tweaking and improving that gives an actual edge in the Forex market. And I'm going to go over the entry points, the exits, how it works. I'm not going to give everything away, but a good majority of it, so you can implement these kind of ideas into your trading techniques, and hopefully it can give you an edge so you can finally start profiting. Let's get started. All right, so here we are on my FX book. This is my Ranger Expert Advisor. This is an algorithm that I've been working on for the last 8 years. You can check it out. It's on my website. Click the link below to get your copy of this Ranger Expert Advisor. All right, so this strategy has been giving me a profitable edge for the last many, many months, and actually years now at this point. And you can see that this tracked account has 22% profit with a 10% drawdown, and it's been profiting just about every single week. And just in case you're wondering why this track record is not verified, for some reason, I'm not sure why that has an X on it, but you wouldn't be able to see this page if this wasn't verified, and I can check with you right now. So the balance is 1,224.74. And if I go to my trading account balance here, you can see 1,224.74. So that account is actually there, but for some reason it's not showing as verified. All right, so this is a 500 to 1 leverage account, and it's been profiting 5 months now. So we're just about at the end of May, and you can see that it has really good consistent profit. Now, 3 to 7% may seem like a pretty small amount to you, especially if you're wanting to trade on a smaller account. But realize that this is about protecting your account balance, not about making obscene amounts of profit. And yes, we don't take any big losses either. So that's another great thing about the strategy is that even though 3 to 6% per month is not a lot, we don't accept any losses, which is really cool with the strategy because we use a particular money management behind it and methodology that allows us to turn bad trades into good trades over the long term. Okay, so let's get into why the strategy is so good, what it looks for, the entries, the methodology, the money management. I'm not going to tell you everything because I want to keep the integrity of the EA clean. And also make sure that the strategy works for the long term, right? Okay, so let's get into what the algorithm looks for. Now I'm going to tell you one of the biggest filters for the algorithm, at least in my opinion. And a lot of my algorithms in the past, or the successful algorithms, use this filter. It's a inside bar candle filter. Now the inside bar is something that's known. It's nothing new to me or nothing that I invented. But used in this way is something that typically most traders don't do. So you can see that we have a downtrend here. It's moving down, and we can see that we have a 2-bar set up here. It's a bearish candle followed by a bullish candle. We're at these 2 bars right here. So those 2 bars, well, I'm actually circled 3, but this bearish candle followed by the bullish candle here. The bullish candle is completely inside the previous bearish candle. Usually what that shows is a potential reversal or price slowing down in this intended direction or the initial direction which is down. A price slowing down in an inside candle, and then we have a retracement or a pullback that happens within that trend. And you can see that's what actually happened. So we have the first entry, and then the second entry followed on a grid. So I have a particular grid on the money management. And I have found that a particular, I'm not going to give away the amount for the grid on this algorithm because I feel like it's a pretty big part of why this strategy is profitable as well. Now there are certain types of grid EAs or money management techniques out there. And a lot of them are okay, some of them are pretty bad. But I have found a particular grid amount, a number amount to be very effective on most trading strategies. Now it's not effective on every single pair, but there are a lot of pairs that you can utilize this grid technique in a good way. And I'm going to tell you that it's in the double digits. It's not something that's really small, but I urge you to explore grid techniques in the double digits that can help you with your trading. Okay, so we have the first trade, which is trade 1, and then trade 2 here. And then we have the retracement that happened after they pushed down, and we were able to exit out for profit on both trades. So pretty awesome there. And then I'm going to show you some trades that didn't work out quite as well. All right, so we have this one right here that actually just closed out today. So this was the pound Canadian dollar. This is the pair that the algorithm trades on. It's exclusive trading on this pair because it's not a pair that's manipulated heavily. If you know anything about trading forex, you may know that the banks are the ones that drive price, and of the majority of price. And so whenever it moves up and down, they're the ones that have all the money to really make price move in that direction that they kind of want. And so they control the market in that way. And it's basically the banks and the institutions against the retail traders, so people like you and me. And so that's why we're constantly fighting this losing battle, is because the banks are the ones with all the power and they have the ability to drive the price, causing us retail traders to lose out. And so they're constantly taking our money over and over and over again because they have deep pockets. So that's how the markets work, and being aware of that will help you develop strategies that can kind of work around these big banks and the shots that they call. And one of those ways is by using or is by trading a pair that's not as manipulated as, say, for example, the euro US dollar, which is one of the heaviest manipulated pairs out there, because it includes the USD. And the US dollar is so heavily manipulated, it's really quite disturbing. So I actually try to stay as far away from the US dollar as possible by trading pairs like the pound Canadian dollar and the Aussie CAD and the New Zealand Canadian dollar as well, because I find that these pairs are much easier to read and to predict when it comes to long-term trading strategies. So here is the entry here. So this is the 2-bar reversal that we talked about. That was my entry point, and then the price went down further. So we didn't quite get the recovery that we were looking for. It was pretty close right here after the initial entry, in the first and second entry, but just didn't quite hit high enough for the take profit amount. So we entered more on a grid, and this is a flex grid. So this flex grid is pretty awesome because the algorithm, based on the volatility of the market, will increase the grid size. So this is not a set grid size. Let's see if I can show you an example of what that actually looks like, because it might be a little bit hard to see. Um, a lot of profitable trades. Okay, here we go right here. So this is what the grid looks like when volatility picks up. So we have our initial trade right here. Was expecting the market to go up. It didn't, and we had a huge candle down. I'm not sure how big this candle is, but let's see. So that was a 100 pip candle. So typically, if we're on a single or a double-digit grid with the strategy, we'd have a bunch of entries in that candle, and it would be quite dangerous, right? But I've found a way to increase the grid dynamically by waiting for the volatility to decrease, so we can re-enter when the market is a more stable situation, and it allows us to make that eventual profit. So that's another filter. So right now we have the filter of the inside candle, right? That's a filter. And then we have the volatility filter on top of that. And then I haven't even talked about this one yet. This is the RMI indicator. And now this indicator is probably the single indicator that's I think it's used in every single algorithm that I have on available on my website right now. Because of how good it is when it comes to not just trading in general, but also when it comes to algorithmic trading. For some reason, this indicator was really well built, and it makes it really easy to implement expert advisor or algorithmic ideas, and they are pretty accurate when it comes to entry points. Easy to test, and a little bit easier to predict. So the idea behind this really powerful indicator is when it goes up above well, right now it's just the 70 and the 30 level. So when it goes up and passes above the 70 and then comes back down, that's when we have a movement down, right? And so when it breaks that level, it breaks the 30 level and hangs around there until it breaks back up, that's showing us that the trend is likely going to be moving back up. But as you can see, it stayed below the 30 level at that point. All right, so below the 30 level, and it didn't break up above the 30 level until this point right here. And you can see, wow, all right, there we go. So the uh, price is starting to move back up, and the RMI showed us that that's where it was going. So the RMI stands for the relative moving index, movement index. So it kind of shows us the price volatility, where it's going. And that's why I like it so much, is because it's pretty accurate and it shows so much within just a very simple indicator. So you could say that not only what I just showed you here, which is crossing from the top down, showing you that the trend is coming back down, but also the trend going up. So you could say that, well, now if it breaks here, that means that it could extend further because it's over in this overbought territory, and it could extend further. So that could be an entry signal on the buy side too, depending on who you are. And so let's see if I can find a better example of that. Okay, so like right here, you see the price where it broke above, and then it continued further from that point. It did break down here, but that was a false break. And sometimes that happens, and then it ended up crossing again on the upside. So this indicator can be used in so many different ways. I use it as a filter, so it's not just by itself. It's a combination of my inside candle filter, my volatility filter, my grid filter, and then also the RMI filter on top of that. So there's a lot of different moving pieces to this algorithm to give it that profitable edge. And let's look at some of the worst of its trading times. And I had to scroll quite a ways back because it's been a really smooth last 6 months or so. All right, so here is something that shows you where it's not quite as you know, smelling the roses here, where we have a multiple entry, like a lot of trades. I think we're in like 10 or 15 trades, and we are on a grid, right? So the grid in this particular area didn't really expand that much because the volatility was pretty low. So we were staying on our double-digit grid, and eventually price did close back down. And this was after a weekend gap that happened. It recovered a little bit and then just fell pretty hard. So that is one area. And here is another one. I think this is the worst that we've drawdown that we've had of the year so far. You can see this one here. You can see the volatility increasing with the grid. So we have that entry and then followed by that one. So there's a little bit of a gap. So it stopped us from entering probably 2 or 3 trades in that area, which is good because we want to wait for the slowing of the market before we enter more trades with the potential for it to come back on a pullback. All right, so the cool thing about this version compared to this Ranger version compared to any of the other versions that other people have, because we were giving out this Expert Advisor for free back about a year ago, at least an older version of it. It's not as advanced as it is now. We've improved it. We've made a lot of changes. It takes a lot more trades. So I recommend that anybody that has the RMI version 7, the RMI or previous version, then the new Ranger EA. I recommend upgrading to the new version because it takes way more trades. It's way better. It's way more accurate. It's way more profitable, as you can see. A $1,000 account going into 145,000 in 10 years. So that is just on one pair, and it trades on 3 pairs. Okay, so here's all the sell trades. Now these are all sell trades, and you can see where they closed out for profit. The buy here and another buy here. So this is a new addition just in the last couple of months to the strategy, where it will take additional trades on the other side while we're waiting for our sell trades to close out. So these buy trades came out in profit, as you can see, while waiting for the price to move back into our favor. This is a new addition, and it makes the strategy more profitable over the long term. All right, so let's see. Anything else I want to talk about? I think that's pretty much it. I wanted to tell you guys about some money management techniques that you can implement with your strategies. That is the inside candle. That's one that's really powerful. The RMI indicator, which you can find, I think you can find somewhere online. And the grid technique, the volatility grid technique that will expand based on price and how price is moving. This gives your strategy a lot more flexibility when grid trading, and will allow you to live to fight another day, pretty much. Okay, so the strategy over the long term from 2010 all the way to current date 2020. So you can see that it's really sound, 90% modeling quality. Yes, we did have 55% drawdown, and that it was the worst of the strategy. I think that it was either in here, it could have been maybe on this one, but it only happened 2 times in the course of 10 years. So that's why you see the 55% drawdown mark right here, is because it only happened once or twice during the course of the entire 10 years that it was tested. Now you might be thinking, whoa, I don't want to, be risking 55% of my account. But realize that that's something that's not going to happen very often. And you might be wondering, well, what about a stop loss? Now this is the thing that a lot of people are very unsure about with this strategy, because they hear it doesn't have a stop loss. Like, what? How can you trade without a stop loss? Like, if I'm putting $100,000 on the line and I have no stop loss, then like, what am I supposed to do? I don't feel protected. I feel like I'm going to get hit and I'm going to lose all my account in a margin call. No, that's not the case. I mean, any strategy can go bad. It doesn't matter if it's a no stop loss strategy or if it's a stop loss strategy. Everything can lose massive amounts. So for example, if you have a 10 trade losing streak and you're only risking 3% each trade, you're going to lose 30% of your account. And with that, a losing streak of 10% of 10 times. So losing streak 3%. 10 times in a row would cause you to have a 30% loss on your account. So that is pretty substantial, right? And the same thing can happen for no stop loss trading, and that's what I specialize in with this particular strategy, is that it has a very small risk amount for each trade. It doesn't martingale. It does grid trade, but it doesn't martingale, which is very important, and it's why we're able to enter so many times in the market and waiting for that recovery to happen. So the stop loss that I don't use is actually implemented into the strategy. So you can use it. It's a percentage stop loss. And so if you want to cut your trades at a specific amount, you can do that with the strategy. And it still is profitable. It actually is still profitable over the long term. And so that's something that you can explore. But I choose to do it without any stop loss because the strategy has been running for over 10 years. I feel very comfortable with it. I feel like it's going to continue to have an edge over the long term because it's trading on pairs that are not as manipulated when it comes to the market. And I feel like its strategy, its combination of methodology and entry is very strong and will continue to be profitable over the long term. But anything can happen. I'm prepared to try to continue making updates to make the strategy more profitable, to make it have less drawdown, and that's what I'm doing this weekend. Is that this What you're looking at right now is the new update that makes the strategy 3 times more profitable than it was in the previous version. So this is the biggest update that I've made to the strategy in the last probably 2 years, and I'm very proud of it. So this no stop loss. Don't be scared of no stop loss trading, and if the strategy is very strong over the long term. If it's able to constantly bring in profit by risking a small amount on each trade, then it's able to withstand a lot of price. So for example, this right here is a 300 pip climb against our current trades that we were in here back in January. That's a 300 pip climb, but we were able to withstand the uh, the drawdown because each trade had a very small amount of risk on it, allowing us to come out in the end with profit once the market decided to come back into our favor. We also were, like mentioned before, we were able to even come out with some hedge profits on the other side while waiting as well. All right, so there are risks. There's risk involved in any trading strategy, whether it's using a stop loss or not. And it's important to be aware of those risks when using a strategy or purchasing one before you get involved, so you're well aware of the risks that you're taking. The problem with a lot of the tools and trading strategies that are available online, they don't tell people the risks that are involved in trading that strategy, what kind of profit expectation, what are the recommended levels, and why. So that's something that I do in my trading, and I hope to educate everybody else in that as well, especially if you're looking for something that works years and years down the road. Thanks everybody for watching. See you next time.